From my point of view, talking about the full life cycle of the real estate market is probably more important than ever. Um, it's important to understand that the real estate market has always been a very cyclical space. For the length of time that I've been in it, there's always been changes. And as I think Sonia pointed out, I've been recruiting for 25 years. So I've seen a number of changes during that time in terms of how the market has developed itself effectively. And it is influenced by and large by broader economic activity. So therefore, when the economy is strong, we tend to see that there is a healthy amount of development and investment always happening in the real estate market. Conversely, if the economy is hit with a downturn, the industry does and has experienced slowdowns. And one significant slowdown that I worked through was the financial recession back in 2008. And it had a profound impact on the real estate market, which I think up until that point had been pretty frenetic in the way that it had been evolving and moving at pace from a development and investment point of view. And obviously, during this period, it led to significant reductions in transaction volumes, large portfolio voids, increased defaults on debt lending, which resulted in much tighter lending conditions, which is really sort of bore where we are at the moment in the real estate market. I think real estate clients have always looked for ways to navigate a cyclical market by anticipating future market trends and sort of leaning into what Tom was saying earlier. The way that the market has evolved over the last, well, since 2008, effectively, however many years that is now, further on we are, I think these trends have become more relevant and more identifiable. So if you take COVID as our most recent example of where we've seen a shift in what clients are looking to do, when we experienced that period of lockdown, everyone had to pivot and find a different way to navigate the landscape because we did not know how long we were going to be in that period of COVID. So, as an example, leisure operators were seeking out dark kitchens to be able to maintain home or online delivery, which meant that the industrial market was seeing a push in that the availability of space being taken by operators that needed it in order to sustain their business moving forward. As Tom pointed out, the living sector is a massive area of growth. I think it's moved away from the traditional residential market that we've looked at. But if you look at the living sector overall now, you're looking at PBSA, so student accommodation, you're looking at elderly care, you're looking at BTR, and even more recently, in the last 5 years, we've probably seen a slight shift in moving away from the more traditional models of city centre built BTR, large apartments, through to single family living, and clients fully getting behind that and wanting to invest in that area. Similarly, the office market has had to reposition itself. Gone are the days where people work a standard 9 to 5 anymore. We're all living in an area post-COVID of flexibility. So I guess some of our operators that are not office operators, office specialists first and foremost, have had to find ways to adapt. And obviously that's meant that some of the more traditional property companies have created their own flexible space divisions. Life sciences has come forward as an area of huge and significant growth. Certainly in the last 2 years, there's been a real attraction about the life sciences market. And if you think about what that's done for the office market, it's allowed investors and the developers the opportunity to reposition what they have to meet another audience of occupier effectively.